Hey everyone, good morning, good afternoon, good evening. Welcome to CoinGecko's 30th uh, meetup, virtual meetup. My name is Zong. I'm the head of research here at CoinGecko, and I'll be your host for today. I think first things first, just want to wish everybody Happy New Year, 2024. I think it's not too late to do that yet, and I think we've got a pretty good start to the year. So this is our first meetup, obviously, of 2024, and it's going to be broken up into two bits. So first, I'm going to run through very quickly a summary of our 2023 annual crypto industry report. You'll know if you have been a long time follower or like listener to our meetup that we do this every quarter, and this is the biggest one yet. I think in total there's about 50 slides that we published sometime last week, right? And after I quickly run through some of the key highlights of the report, we're going to go into a very interesting, I think, panel discussion with three very distinguished guests, and we're going to talk about the state of the crypto market in 2024 and what do they think is sort of going to happen, what's going to develop in the industry in the year to come. So without further ado, I'm going to jump in straight into the first part, which is, like I said, the summary of our annual crypto industry report. Before I begin, I just want to thank our sponsor, BingX, this time for sponsoring this report. I think thank you for continuing to enable us to produce this report every quarter. Yeah. So going straight into it, I think as you guys all know, it's been a great year for crypto in 2023, and that's been, I think, something that has caught a lot of people off guard, right? So the total crypto market cap actually pretty more than doubled from 829 billion at the start of 2023 to close the year at 1.72 trillion. Obviously, it's slightly down since the start of the year, but it's been a very impressive run, right? And pretty much we're sort of double where we were at the start of 2023. A lot of the gains, as you can see from the chart here, pretty much came in Q4 itself, right? So going from 1.12 trillion to 1.72 trillion, which was a 91.9% quarter-on-quarter increase, right? So very interesting. I think pretty much all of this was really driven by what started as rumors and then sort of became reports, right? That the US SEC was going to approve Bitcoin spot ETFs for the very first time in the US, even though these products actually have existed in other parts of the world much earlier. But the US being the largest economy out there and the largest capital market out there, obviously there's significant impact or significance with this sort of U-turn decision, you could say, right? And you can see that sort of driving the markets, you know, for 2023 and indeed, at the start of 2024 where we are so far. Nonetheless, I think what's also good news is the return of volumes, right? So you can see in Q4 really where everything sort of ran up. You see that there's been a increase in trading volume, and that's been a good sign. However, I think overall trading volume for 2023 is still lower than it is compared to 2022. This is something that we'll touch on again at the end of this presentation. But overall, it's good, some signs of recovery. But pretty much, I think the price has sort of ran ahead of the liquidity that we are seeing in the market. Some notable cryptos to point out. I think we'll talk about a bit more of them. Next slide is Solana, obviously gaining a fair bit. Close out the year at number 5. They are now the third largest, I would say, smart contract platform and the fourth largest chain behind just obviously Bitcoin, Ethereum, and BNB. And AVAX also was a big gainer in 2023. Again, most of the gains coming in Q4, going from number 32 to number 9. We have some swapping of the positions near the end of the top 30. I think mostly you can see the trend is sort of tokens for chains and layer 2 sort of making having a resurgence right at the end of the year. Talking about returns across all the different coins, obviously you see some all green bars in 2023 Q4 and FY 2023, right? The whole year. But really, I think the story here is Bitcoin, right? Pretty much, being the, I guess, the key driver of the market, pretty much outperforming actually most of the crypto that you see on this list, right? So definitely outperforming people like Ethereum, BNB, right? And even sort of alts or smaller DeFi coins like Uni, etc. Right? So but nonetheless, I think there are chains that have or there are tokens that have sort of outperform BTC or put in very, very strong performances. So gonna call some of these out. Injective went up by about 28 times. I think at since the start of the year. Solana, obviously, we've already mentioned them. IMX as well, putting in a strong performance, and so on and so forth. I think pretty much every sector was green in 2023. But really, I think Bitcoin was sort of the large winner, other than if you had your money in some of this alts. And speaking of Bitcoin, I think safe to say big story of the year. Uh, Started the year at about 16,000 and a half, right? 16,500, and pretty much closed out the year at 44,000. Right? So this is what it says on the slide: 155% increase in the price within a year. Obviously, we are back down to about 40,000. I just checked. I think a couple of hours ago. I know we dipped below 30. We were in the 38,000s, and then we sort of came back to 40,000 just a couple hours ago. Largely due to the news of the Bitcoin ETFs being approved, and then all the activity that's stemming from that in terms of whether it's people taking profit or people swapping out of GBTC into other alternatives, or a lot of reasons for all this happening. But I think Bitcoin at 40,000 is still a very good level again compared to where we were 12 months ago, right? Again, most of the gains came in Q4, and and I think it's going to be very interesting, and we're going to talk about this in our panel discussion about what's going to actually happen, given that after the ETF approval that we just saw, there's going to be the halving event coming in April as well. The other interesting thing I'll point out about Bitcoin is obviously hash rate has continued to grow significantly. It actually more than doubled as well in 2023. And I think that's a sign that this is a very comfortable price for miners. I think if you look at publicly available information, the sort of break even price, I guess, for miners is only at about 15,000. So it's actually a very comfortable price for miners who are if they know what they're doing, are sort of in the money. And I think it's been a big driver of continued investments into mining equipment and into hash rate and things like that. The other big story for Bitcoin obviously is inscriptions, right? So I think if you've been following crypto at all in the last 12 months, you will have heard of this thing that was first actually launched and proposed on Bitcoin by Casey Rodamo in all the way back in January, which is sort of a technical solution, I guess, which where you could actually create NFTs and sort of semi-fungible tokens, which are like BRC, what we now know as BRC20 tokens, or a similar token to BRC20 on the Bitcoin network itself, right? So people will sort of remember that Bitcoin was supposed to just be the chain for transactions until sort of Taproot came and people could do more things on chain itself. But in January, Casey Rodamo figured out a way to sort of very, very I think in a very, some would say sneaky, or some would say innovative way to sort of create NFTs and semi-fungible tokens on the Bitcoin blockchain itself. And by the end of 2023, there's been like 52.8 million of these inscriptions. Now, one of the things with these inscriptions is because all the data is actually inscribed onto the chain itself, it actually eats up a fair bit of block space on the Bitcoin blockchain and or on other chains, right? That that uses inscriptions or that makes inscriptions available. And because of that, it's actually been a big driver of Bitcoin fees, right? So transaction fees on Bitcoin, which actually went up to hit an all-time high of 23.7 million in December, when sort of the whole ordinal or the sort of inscriptions craze was actually going off near the end of the year as well. If you look at the chart, I think it's pretty interesting. We see two spikes in the total transaction fees for Bitcoin, one in May and one in obviously at the end of the year, nearer to the end of the year. And you can see that there are bars of inscriptions activities going on. Now, the way inscriptions work is minting and transacting activities are actually the same activity. And so, when you look at these bars, it could either be, people minting or people just transacting or trading these inscriptions. And I think what we realized very quickly is that, minting inscriptions itself actually is not the biggest driver of fees on the Bitcoin blockchain, but rather, the continuous speculation and trading activities that was generated by all of these meme coins. So you can see actually, in Q3, even though there was significant activities and most of this, we believe were minting activities, they actually didn't cause the fees on Bitcoin to spike that much. But when we came to the end of the year where there was a lot more trading happening, that's when the fees really spiked. The other thing I think to point out that this sort of started on Bitcoin, but has sort of infected all the other chains as well, going across, even Ethereum and layer twos, causing some chains to break as well, when the traffic really spiked and that created a lot of congestion. And I think this is now a significant topic of debate and a significant topic of discussion among a lot of communities, particularly the Bitcoin one, right? So there are a lot of discussions around whether this is a accepted use of block space of the Bitcoin block space, or accepted use of uh, well, whether it's an accepted outcome for the fees to spike this way because of NFTs and meme coins on the Bitcoin blockchain. But nonetheless, I think the spike in fees actually do pay for miners, right, to continue to maintain the chain and to continue to run mining equipment. So it does contribute to what we would call the security budget of the blockchain. So I believe this debate continues, but I think it's safe to say it's been so successful that unless something drastic happens at the core protocol at the base network level, these activities will continue to happen in 2024. I move on to Ethereum, and I'm not going to talk about the price of Ethereum because it only appreciated about, well, I say only appreciated, but like pretty much it appreciated about 90+%. Definitely still underperforming Bitcoin. But nonetheless, actually the big activity or the big event that happened, and I think it feels very long ago now, which is the Shapella upgrade for Ethereum was actually completed back in back in April of 2023. And you can see that since then, right, the total stake ETH has continued to grow. So if you remember, with Shapella upgrade, it enabled people to withdraw their stake ETH finally. So before that, even though Ethereum migrated the proof of stake, you couldn't unstake your ETH until this recent Shapella upgrade. And since then, actually, people thought people will withdraw, they will take profit, right? But actually that has not happened, and it's actually galvanized a fresh wave of people to stake their ETH, right, onto the network itself. And you can see that this has grown significantly now to about 29 million ETH being staked in the protocol. There's been a slight dip at near the end of the year because the Celsius bankruptcy estate actually started to unstake their ETH so that they can sell it to repay creditors. But I think this is probably just a blip, I think, in the grand scheme of things. The other big discussion around staking and stake ETH is obviously the dominance of Lido. They now have about 30% share of all stake ETH, and I think people are worried about Lido's dominance, whether if they continue to increase their market share, they can actually control the chain, censor the chain, etc. And I think even though their market share has paused seems to have topped out at about 30%, ever since the start of 2023. I think it's still an interesting debate that goes on. I think people are still asking them to reduce their stake, but nonetheless, I think with all things blockchain, there's always like continued technology innovations that try to solve these things, like distributed validated technology come into the picture, and stuff like that. That's going to help sort of further decentralize the state within Lido itself. Obviously, we can't talk about Ethereum without talking about layer 2 adoption, right? And you saw layer 2's sort of take off in 2023 as well, seeing about 1.31 billion transactions, right, in total. I think this is also the first year that we're seeing that transactions on layer 2's have exceeded transactions on mainnet, right? So on Ethereum as well. So definitely, I think growing adoption of layer 2's, people migrating to layer 2's, users migrating to layer 2's because it's just faster and cheaper, and and we are seeing more apps being built on these layer 2's as well to take advantage of this of this of this performance, right? So Arbitrum amongst the Ethereum layer 2's is still firmly in the lead. It executed actually almost the same amount of transactions with Ethereum mainnet in 2023 overall. And whether in terms of number of transactions or TVL, it is still, I would say, quite far ahead of its competitors. Nonetheless, I think quite interesting is that we saw OPBNB have a very strong December, I would say. And that actually was driven by inscriptions activities on the chain, which I mentioned earlier. But I think other than OPBNB, going back to Ethereum, you actually see activity mainly, with ZK Sync, with optimism that sort of tailed off slightly, with Starknet, and with Base, right? So I think with ZK Sync and Starknet, it really is about airdrop farming, people trying out these chains, hoping to get airdrops. But optimism and Base really having their fair share of activity. I think Base had a very successful launch in Q3, if you can remember, right? With Frentech and such. And there's also been able to grab a share of transactions that's happening on chain. Moving on, I think to the third chain that we sort of choose to highlight in this report, which is the first time I think we've included a special section for Solana, because of its very strong performance in 2023, pretty much I would say rising from the ashes, right, of the FTX collapse to deliver, I think, a 10x price return, right, in 2023, going from about $10 to $101, right? It really had a jump at the start of the year, right? But really the rally again came in Q4, right? As it sort of just took off. Yeah. There are a few reasons for this. I think we do mention it in our report, but I just want to point out some of it. So one is definitely, I think, like I said, the whole narrative around rising from the ashes of FTX, but also I think there are technical improvements, right, that they have made to the chain. I think if you can remember back to even 2020 or 2021, it was always one of the fastest and the cheapest chains to use, but it always had issues in terms of outages, right? So there's no way to gloss over this. Like the chain would sometimes have an outage and stop working. But I think over the last 2 years of the core devs really putting in a lot of work, the network actually hasn't seen a major outage since February 2023, and because of this stability, I think people are returning to it with more confidence. And even when you see all this activity spike and you see all these volumes spike, we've not seen the chain actually buckle under all of this increased stress, right? So I think that's a very good sign for the chain itself. Um, it also, benefited from, the community that has left has done a really good job in, communicating the benefits of Solana, and, showcasing the possibilities of building on Solana, to the extent that there's now a Opos sort of rallying cry, or slogan for the community, which stands for only possible on Solana, right? And that has sort of also driven a lot of bullish sentiment around the chain. I mean, finally, with it coming back from the ashes, and it's seen a proliferation of, very generous airdrops, right, from older projects, such as Jito, such as PIF network, right, and Solana always had its meme coins, right? So it started with Bonk, and it sort of now dog with head, right? And it sort of spawned all the meme coins on the ecosystem. It sort of caught the right wave with things like AI, with Deepin, right? Decentralized physical infrastructure last year. So it's very interesting. Like, all of this has helped people rediscover the chain, I guess, or revisit the chain, and sort of drive up, price and activity on Solana itself. So I think very exciting, and we're going to again discuss this more in our panel discussion of whether this is sort of sustainable. Moving on to DeFi again, want to go quickly because I'm running a bit out of time. I think DeFi ecosystem again has been green, but I think what is really interesting is if we look at the sectoral breakdown, what has sort of gained the most in the past year is, one, definitely liquid staking, driven by all the liquid staking activities on Ethereum, right? With stake ETH, FSTs being created, right? But also, I think, what's also interesting is the return of lending and bridges, right? So lending, for example, I think is lending, for example. So the bubbles here represent TVL, right? So the return of lending activities is really a reflection of return of bullish sentiment to the market. So lending activities only spike when people want to go on leverage and they want to go long, right? So um, really we have seen TVL on lending protocols increase, and actually we've also seen the yield for stable coins, I think, increase as well across lending protocols. So if you remember, maybe a year plus ago, the yields were quite low, or were very low. I mean, even below, I think, the treasury rates at that time. But right now, borrowing interest rates for stable coins on lending protocols now are now in the double digits, right? So we are supplying stable coins to these lending protocols. You are actually getting double digit returns on your stable coins, and it's a sign of bullish sentiment, like I said, and people wanting leverage. The other one is bridges, obviously, and bridges is also a sign of people using more of the bridges in order to like I said, go to layer twos, and we're seeing these activities across uh, across bridge, which wormhole bridge, going to Solana, and as well as XLR as well. So these are all, I think, very interesting trends, and it really shows where the market is going, or it's a reflection of where the market is going, in terms of trends, and what people are focusing on and doing on chain, right? Because DeFi is fully on chain. The other interesting trend, I think, to call for 2023 is obviously real world assets like RWA. Um, so a significant jump in TVL, right? Growing by 640%. It's now a 5.62 billion DeFi sector in our market. Still not as big, obviously, as some of the others you can see from this purple bubble, but definitely growing very quickly. And again, will be interesting to see what comes out of this. Yeah. Okay, some bad news, because we're now going to talk about NFTs, and it's been I think, compared to every other part of the industry, it's been a very, very challenging year for NFTs. Um, I use this slide. Really, it's a it's a breakdown of NFT trading volume by platforms. But I think just wanted to point out a few things. I think one is, NFT volumes have definitely fallen off significantly in 2023. The total that we recorded in 2023 was less than half, or close to half of what the market did in 2022, right? And if you look at October, which was September and October, which was the worst months for 2023, these volumes were actually even below pre NFT summer 2021 volumes, right? Which it's really been like a deep reversal in sort of volumes, and really that's also despite there's been more trading platforms. Blur was running pretty much a full year airdrop campaign, right? Multiple seasons and things like that, and it still couldn't reverse this tide, right? Other than for the fact that in November and December we saw a lot of volume coming from inscriptions, right? And most of this going to OKX inscriptions marketplace, right? So the change, you can see the change in market share of these different NFT marketplaces. And it's also a reflection of where the NFT market is going in terms of change, right? So at the start of the year, you could see Blur and OpenSea still being the main platforms, and obviously most of this activity is on Ethereum, but you see this slowly fade throughout the entire year, hitting the bottom in Q3, and then in sort of Q4 you see the rebound, partly by OKX, Magic Eden, Unisats and Ordinals wallet, which are the sort of the Ordinals marketplaces that are out there. There's also a slight revival in Solana NFT volumes in at the end of 2023 as well, and I think the big beneficiaries are TensorTrade, which is sort of like the Blur of Solana, as well as Magic Eden as well, having some impact, gotten some benefit from that. Yeah. But all in all, a very, very challenging year for NFTs in 2023. And I think again we're going to discuss this later on. What 2024 holds for NFTs. Yeah. Just very quickly, just want to highlight, those were definitely not the only things happening in 2023. You can see, I think we did a quick analysis of some of our web traffic on our platform, and some other trends that were driving it was things like AI, GameFi, meme coins, continue to drive the market. And I wouldn't drain this slide other than just to say that there's a lot more that's going on in the space, right? That we really couldn't capture all of it. Yeah. Finally, I wanted to circle back and talk about volumes. These are volumes across both spot exchanges as well as perpetual exchanges within our market, both centralized and decentralized. You can see that it does fluctuate with market sentiment, and no surprise that again Q4 was sort of a big quarter for the year, even though actually Q1 actually did slightly better than Q4, but nonetheless it was a strong recovery, 53.1% recovery from Q3 itself, right? I think when you look at the chart, I think the things that we want to highlight is sort of SEC-DAX ratio, and you can see that for the spot one, actually the SEC-DAX ratio is at about 91.4%, while the SEC-DAX derivatives trading ratio is at about 98.1%, right? So I think for spot, we're seeing a bit more movement onto the DAX perspective. They have about 10% market share in the grand scheme of things, whereas from derivatives it is still very, very much largely dominated by the centralized players, right? And last slide of the day, I think wanted really to zoom into centralized perpetuals, and I think it's been a bullish story. We actually saw strong recovery on perpetual sexes, right? Perpetual centralized exchanges, had a really, really strong year. they actually more than doubled the volume that they did in 2022, which is, obviously a sign of recovery. I think compared to the spot market, where actually 2023 volumes still lag behind those of 2022. However, I think it's still too early to celebrate. This is still quite far behind the volumes that were done in 2021, right, during the bull market, where Binance alone had 24 trillion in volume, which is pretty much the same as the all the top 10 exchanges in 2023. Since I mentioned Binance, I think the other big story is Binance. I think um, had a major settlement with the US authorities at the end of the year, and this has definitely affected their market share. Even though I think people have been talking about this case for the whole year, so you actually see that their market share has been steadily decreasing throughout the year. It's the same for perpetuals as it is for spot market. Nonetheless, I think it still hangs on to its top position in both spot and centralized spot and perpetuals market, even though its market share has decreased compared to the rest of its competitors. So yeah, this is the end of my summary. Again, like I said, it is the full report is about 50 slides, and you can find that already on our website if you haven't seen it at coingecko.com/research. Do check out the report. Let us know what you think. If you find anything interesting, do let other people know about it. And and I think I'm gonna wrap up this section, and we're gonna now transition to the next part where I'm gonna host a panel discussion with our three other guests. So stay tuned for that. We'll just give them a few seconds to sort of come into the stream. Okay, so I think we have everyone. Hi guys, can you guys hear me?
Yeah, sounds good.
Hello.
Sounds good. Okay. So I'm very pleased and happy to welcome our three guests for our panel discussion. Let me just go around the stream. I think we have Thomas Tang. Thomas is the VP of Investment at Rise Labs. We also have Ting Yan. He's the head of NFT research at Delphi Digital, and we also have Wangarian, who's the co-founder of Tangent. So welcome everyone. Thanks so much for joining us today. And I think we're going to have a very interesting discussion about what's been happening in 2024, and sort of what you guys think are going to happen. But I sort of wanna start by talking a bit about 2023. I know I've done a recap for about half an hour, but I think just wanted to start by asking, it's been an exciting year, but in your opinion, what were your personal highlights in 2023? And perhaps we can start with Thomas, yeah, and sort of go around the table. Yeah.
My personal highlights were the resurgence of bull market. I think we all like it when number goes up.
Yeah, I think price improves fundamentals, sort of. Thing.
Yeah, I think for me, as I look back at 2023, and because I spent a lot of my time like in the NFT space, the thing that I thought was the biggest win was really the Pudgy Penguins like going to Walmart, and this was probably the biggest win for the NFT space in a long time, because I mean what it shows is that like all of these like PFP collections are not just like cartoon JPEGs. It's not just about speculation, but there's actual real business value and IP actually being created through all of this. And I think to me, it's also very inspirational. It's also showing that how other NFT teams can also aspire to build this kind of like businesses. So I think that was something that was very exciting for me.
Yeah, I think for me, there were two interesting things. The first one was DeFi hitting a floor TVL number that indicated that there was, very strong product market fit that showed that, DeFi as a vertical is not going to go away anytime soon since its inception. The second one that was quite interesting was actually Friend Tech to me because that was a net new experience. Even though it was a failed experiment at the end of it, I showed you that crypto is innovating in its own way, and producing or creating different solutions to how we interact with one another. And I hope to see more of that in 2024.
Yeah, I think it wasn't all smooth sailing either, right? In 2023, and obviously, we really talked about the NFT market having a challenging time. I'm wondering, I think, what about the inverse of it, right? So what were some of the low lights, or what are some of the things that you didn't think worked out like how you would have thought in 2023? Maybe we go the other way. So Wangarian first. Yeah.
Yeah, so I think one thing that we were pretty optimistic about until its eventual cratering was actually Azuki's. We were actually optimistic that Azuki's would sort of lead the NFT recovery. And it was well poised, I guess, to take the market leader spot after the demise of Bases. But, the founder just couldn't keep it together, shot himself in the foot. And, it really goes to show I guess the quality of NFT projects right now. So I'm pretty happy to see better founders step up. Obviously, Pudgy Penguin's taking the prime spot now, and I think what the guys at Memeland is doing with their NFTs and what they're doing on a larger platform is pretty interesting, and how they're incorporating their own NFTs. So I think hopefully we see more of these things, sort of NFTs in conjunction with different products or services that are offered to the general public, and not just as standalone JPEGs. This should be the way NFTs are, I guess, promoted. And I'm pretty sure in 2024 and 2025 we will see individual landmark or hallmark NFT projects come out for their respective ecosystems, like Solana, Bitcoin, and Ethereum.
Ting Yen?
Yeah, I would say that the thing that probably didn't work out as well as I thought was actually something that Wangarian mentioned just now, which was Friendtech. So I personally actually spent a lot of time on Friendtech. I thought it was really exciting. I thought it could really have become like a top consumer app. It really had the potential, to bring crypto to the mainstream, because if you look at many of these social media platforms, I think monetization has always been a big challenge. And I think incorporating crypto, both from a speculative point of view as well as that tax that's imposed on this, could actually be a very interesting sort of like business model. But unfortunately, I made lots of friends, but I think it was a great idea, but just poor execution by the team, unfortunately. And I think it was very clear that they didn't have any experience at building consumer apps. And I was really excited by the idea of it potentially becoming like an on-chain sort of like reputation layer that ties a well-known social graph on Twitter to what you actually do with your assets in a wallet. And I do think that someone will come in and actually do this, but it was unfortunate that it seems like it didn't work out.
Yeah, perhaps it's gonna come back again, right? So another founders may take the idea and run with it again
Yeah, I'm
in the
sure it
future.
will. It will.
With crypto, like these things tend to happen. Thomas?
Yeah, I agree with what people have said. Personally, I think we are still seeing the same sort of behavior that has plagued most crypto degens. Everyone is in love with leverage. Everyone is in love with um, attention. I think we saw the worst things happen with people transferring immense amount of ETH just to be locked up on a layer two like Blast, and we see bad actors in the space, or potentially unknown intentions there, where you just have all this TVL locked up in somewhere that I guess is entirely speculative, and perhaps maybe in 2024 we can look towards a space that is not short term, that doesn't blow itself up on leverage, and doesn't instill its own systemic risks upon itself. But yeah, I think that remains to be seen.
yeah, I think still lots of degen activities happening, and yeah, only seems to be increasing throughout 2023 as more bullish, as people got more bullish, I guess. But speaking of long term, and speaking of risk, I think one of the biggest narrative that drove the crypto market in 2023 was obviously the spot Bitcoin ETF, right? And we finally got it approved, or the SEC finally got it approved 2 weeks ago. I think we're still seeing the effects of that, right? I think all of us are paying very close attention to how the daily numbers in terms of inflows, outflows, what's happening with GBTC, and the other newcomers to the market like BlackRock and Fidelity, and Franklin Templeton has got a laser eye sort of profile pick up now. Um, I was just wondering, I think in your view, I think how do you think the introduction of the spot crypto ETFs in the US is potentially going to change the crypto landscape, especially looking ahead, there are also Ethereum spot ETF applications on the table as well. Ting Yen first. Yeah.
Yeah, sure. So yeah, I think it's something that has been dominating like everybody's mind space like these last couple of months. And I think as you think about the Bitcoin ETF, like at the end of the day, is something that's just very positive. Like it's very hard to say that it is something that's like negative on the space. My personal take on how it changes crypto is that I think it shows that crypto is growing up. I think for one, Bitcoin becomes a macro asset. So it's going to move in line with what goes on with the rest of the macro markets and becomes a lot more tied up with institutions and what's going on in the other capital markets. I think it sort of like divides crypto into a few different sectors, right? There's going to be a sector of crypto that's going to be very regulated. It's going to be orderly. There are going to be institutions, the big boys, that's going to come in place. And then there's also going to be a part of crypto that is going to be like the cowboy, sort of like degen, gray area kind of land. And I think the development of the space is going to shift accordingly to this. And so we might not just refer as something as just crypto anymore, but it's going to be like very different specific sectors that are growing big enough for them to take on their own path in terms of like development moving forward.
Yeah, I think it's interesting there may be a segmentization, I guess, or divergence. Wangarian?
Yeah, I think it's pretty. It's one of the best things that can happen to Bitcoin right now, in terms of institutionalizing the flows that are expanding the liquidity pool to the biggest, I guess, buyer set in the world. Right. I think if we didn't have the ETF approval, chances are it would be very difficult for us to imagine going to all-time highs in 2024, even with the new halving. But I think with this in play, you sort of have to set up for Bitcoin to break all-time highs, which I do think is the base case this year, and potentially, break, 100, 200, 300K price targets some point in the future, right? Because now, instead of, the 5 or 10 billion dollars in buying power that we have in crypto today, you're now exposed to hundreds of billions of dollars that can potentially buy us. And then you couple this with the new generation being ever more receptive for crypto. This is, part and parcel of getting crypto as an asset class to that 10, that 5-10 trillion dollar mark for the entire asset class. So Bitcoin is the first step. I'm not sure when the Ethereum one is going to be announced. Hopefully sometime this year. But that will most undoubtedly sort of put crypto properly on the landscape.
Yeah, thanks. And Thomas?
Yeah, I completely agree with that. I think just by virtue of it being allowed to exist within the largest regulated framework in the world, not only does it infuse a level of institutional credibility, it is not just a symbolic step. It is, as Darryl mentioned, incredibly, it's become ingrained in our culture already, right? And within this like regulated, accessible, familiar investment vehicle for the rest of TradFi to be able to access Bitcoin. I think something that people miss out on is also that it then has the rest of the established TradFi piping to be able to custodize, to be able to develop more institutional products that the regular TradFi institution will use. You can use it as collateral on anywhere else. And I think people are underweighting on a long-term scale how massive this is for our industry.
Okay. I think before we sort of jump into the specific sectors, I did want to pick you guys' brains on the other big macro topic for 2023, which is sort of something that I didn't sort of pick up, which is the heightened interest rate environment that sort of occurred after most of the Fed and central banks raised interest rates to combat inflation. Obviously, this has affected investments into all sorts of startups, including crypto ones. Facebook says it's been down 2/3 in 2023 compared to 2022. Most of you, I know, Hungarian and Thomas definitely run funds. Thinking Delphi has a strong incubator and sort of of projects. I was wondering, how has a tighter environment, a tighter funding environment, sort of um change your investment decisions, how you look at projects right now, and how is this going to evolve in 2024, I guess. Maybe start with Thomas. Yeah.
Well, I think what goes up must come down, right? And essentially, once you see headline inflation tapering off, we're looking towards an election year as well. Then I think the expectation and the market's pricing this already, which is why we have this bull run now, is that sooner or later they will have to start bringing the interest rate down. So perhaps within the past year, we had to make more stringent investments because the hurdle rate is higher. But perhaps going forward, if the expectation is that it will start to taper down, then it's only reasonable to expect that the hurdle rate then decreases, that people continue to move out further into the risk and the scale. But yeah.
Thing yet?
Yeah, I mean, I won't speak too much on this. I think my Hungarian and Thomas probably are much more deeper into this. I think the good thing in my naive point of view is that we probably reached like peak interest rates for a while. It seems to be coming down, and I think markets are generally forward looking. So I think this is a pretty good environment, to look forward in what's going to happen in the next couple of years. Hopefully, we get a looser sort of liquidity environment, and that's with better liquidity is always better for risk assets, and crypto being like typically on the furthest end of the risk asset spectrum. Hopefully it's going to be a good one.
Hungarian?
Yeah, it's pretty much a no-brainer. Once interest rates come down, or the expectation of interest rates come down, then you're just supposed to bring up your risk appetite, and it's quite telegraphed already. So this is nothing new in the market. I would say that when interest rates were higher last year, we were actually more aggressive on the venture side, simply because everyone else was scaling back and we're trying to make investment decisions from a 3 to 5 year time horizon. In light of that, as the bull market picks up and risk on sentiment comes back, we actually are dialing down our venture deal velocity right now, just as a measure of trying to be contrarian, because the worst thing you want to do is accelerate the pace of venture commitments you do as you get later and later into the cycle. So yeah, so it's inverse between the venture deals that we're committing to and the liquid sort of risk on appetite that we're putting on the liquid markets.
Yeah, so I think that's an interesting sort of dichotomy, right? That maybe people don't realize, which is actually the bear market is probably the best time if you're a fund and have dry powder to sort of deploy and can sort of pick up some nice deals and good deals. All right. I think let's dive into some specific sectors. Starting with I want to talk about infrastructure and base layer. And I think obviously we saw in 2023 there are two big parts, right? Or well, two big players, and then there's everyone else that we'll talk about. But essentially there is the Ethereum, EVM, and layer two, and sort of the that ecosystem, as well as so Solana having a really good run, and sort of establishing itself as like the second sort of big ecosystem with a completely different approach, a monolithic approach to building out its stack. I think I wanted to start with EVM and layer twos. I think with EVM and layer twos, there's always new tech happening, right? So that's like early days there was like staking, and then ZK came into the picture, right? And right now it seems to move towards things like modularization, right? Celestia, EigenDA, people talk about parallelization, right? A lot of new chains, a lot of new innovation, but it does feel like people are getting a bit tired of this narrative, even though I know a lot of money is actually flowing into this area. I think Thomas talked about people parking TVL in Blast, even though there's technically no chain, right? I guess to start with, what are people's thoughts on Ethereum, EVM, and the whole layer two sort of competition, I guess, or the layer two race that's sort of going on at the moment. And maybe start with one, Gary.
Yeah, I mean, it's increasingly likely that you're going to have you know at least half a dozen pretty popular layer twos. I think the more layer twos pop up, the less the impact or importance you get for the next new one that comes along. It's looking like if I were to try and anticipate the market structure for something like this, it's probably going to be oligopolistic in the sense where you get a couple of powerhouse layer twos that attract 80-90% of the TVL. And then you're going to have a couple of smaller niche ones that may operate as either layer twos or like layer threes on the layer two, or like some sort of L1 side chain that is linked to the EVM that is trying to pass off as a layer two, but I don't think these are going to receive all that much traction. The bottom line is there can only be so many ecosystems for the amount of dollars that are in crypto today. You can't keep fragmenting the liquidity endlessly. It's got to stop somewhere. But I think the value proposition for owning layer two tokens now is actually pretty poor because of this fragmentation. So, for example, if Blast is going to launch, all the attention is going to be on Blast. What's going to happen to Optimism and Arbitrum with all their unlocks coming on? Chances are you're not going to get that far up higher on evaluation perspective for the remaining L2s. So I'm not particularly constructive on layer twos in general from a price point of view.
Thomas?
I think the emergence of more and more layer twos only solidifies the fact that people recognize that the EVM is the dominant smart contract chain. Of course, there's monolithic Solana on the other side, and all your other parallelized non-EVM L1s. But I think the common consensus is that the EVM is not going away, and perhaps all these are only garnering more and more mindshare to Ethereum itself. Yeah, I think with the continued fragmentation of it, clearly there will be users, and perhaps it is one of the L2s that offer a more modular approach, and are able to then take TVL from one chain and be able to connect them seamlessly with protocols on other chains. I think that people underweight the ability for TVL to move seamlessly across chains as the underlying infrastructure does improve.
And Ting Yen, from your perspective?
So I think what I'll add to this conversation is, yes, I think there's just going to be so many of these like new chains, new layer twos, new layer ones that are going to be launching. I think from a technical perspective, it's not hugely difficult to deploy a new like layer two with some slight modifications onto the technology. And I think what's going to be important is looking for these like chains that are, how are they differentiating from each other. So I think like chains that are becoming that doesn't have a very clear value proposition and are more like general purpose of like chains, I think it's going to be very difficult for them to differentiate from one another. So I think that's one thing I kind of like look at, right? What are the chains that have a very specific value proposition for a group of like builders, entrepreneurs to want to actually build on the chain. And then I think the other thing in my mind is that I think technology at the end of the day is probably not going to be the differentiating factor in sort of like determining like which of these blockchains are going to win, right? So if you have a marginal improvement in, say, one of these blockchains in terms of like what is applying on the ZK technology versus another blockchain, I'm not very sure that's going to be the factor that really makes a very big difference, because I think at the end of the day, all of the technology is people are going to learn from each other. It's all going to converge towards the end. I think what's more important is the distribution and which are the chains that actually have access to users. And that's why I think chains like, for example, Base, which has access, is very highly connected with Coinbase, potentially like Mental, which is like closely connected to Bybit, and these have like already millions of users that are using these like centralized exchanges. I think that is what makes it interesting, and we could see the kind of change that I think will probably get a greater level of adoption.
Okay, I think quite interesting. I think we lost Wangarian for a bit. Let's see if it comes back. But I think the flip side of this conversation obviously is Solana. So Tingyan, you just said it actually doesn't matter. The tech doesn't really matter. It's about users and sort of ecosystem. So what do you think about Solana then?
Yeah, this has been a debate that's been going on for quite a while. I personally do like Solana, and if we step back a little bit, like, and especially there's been a lot of comparisons being made with like Solana versus Ethereum and the EVM sort of like ecosystem. I think at the end of the day, this is very much a philosophical thing, right? Solana starts by saying that, hey, let's start with a high performance chain, and then we find ways to decentralize this better. Whereas Ethereum starts with decentralization first, and then we try ways to improve its performance over time. And they're coming from like different angles to tackle this. I think we are still in the days where it's a little bit early. We don't really know which approach is necessarily the best model. What do applications really want? What do they really want to build on? And I think that you can't have a perfect blockchain, right? So Solana, I think, is very interesting because it is it's cheap to use. Like transaction costs are very low. It's very fast. Like transactions just go through almost immediately. And what it does is that it supports a number of like use cases that are already that people really want to build for today. Whereas like say if you want to build on Ethereum, like you might have to wait a while until the scalability gets the fees down to a level which is closer to like less than a cent also. So I think that's very interesting to kind of see. Of course, I think Solana is going to get its own problems over time, especially on scalability, because it's a monolithic chain, and if you have like a lot of high usage applications like running on it at the same time, then there will be some issues that are going to be there. But yeah, and I think the other thing that I'll just quickly mention in Solana is that other than Ethereum, is probably one of the other chains that I think will be here for a long time. Because in my mind, I think like every blockchain ecosystem has to go through a sort of like trial by fire. So I mean, Eve had the DAO hack, Solana had the FTS collapse and the SPF sort of like issue, yet it was able to sort of like bounce back hard. Whereas some of the like newer blockchains haven't gone through that sort of like growing up phase. So that's one of the things that makes me bullish about. So
Thomas, thoughts on Solana?
Yeah, I think Rise has famously been pretty involved with Solana from the get-go. I think most people expected Solana to just die out post FTX, and but what really we've seen on the ground is that the developer ecosystem has only been growing since then. We've seen use cases that are only possible on Solana, as the famous tagline has coined. We see DeepIn networks choose to migrate to Solana because genuinely it is the only network that can support their use case. And I think that that's a massive validation that genuinely there are things that you cannot do on Ethereum. You cannot do when your transactions cost even a cent, but you need it to be at a fraction of a cent and practically as close as possible to the speed of light for it to make sense. So yeah, I think Solana stay here to stay. Yeah.
And Wangari, I think we got you back.
Yeah, sorry, that was a glitch. Yeah, no, I agree with both TT and Thing Yen. I think it's pretty straightforward now. What I will say is that I think TVL and amount of USDC that continues to flow into the ecosystem, even today, is still constructive. There are still more and more users bridging over now, which makes me slightly more optimistic on the medium to long term of the fate of the chain. It's gone through the hardest part, and now it's got, I would say, sufficient critical mass of developer talent, user interest, and TVL, such that it can probably stand on its own 2 feet. Whether it's overvalued or not is a separate question, but I am of the belief that price always leads fundamentals. So, for now, I don't see anything to stop the rise of Solana, at least giving ETH a run for its money somewhere down the road.
Yeah, I think before we close out the infrastructure sort of base network section, I know there's obviously a lot more chains out there, and ev- every other day we see new ones come to the market as well. I think we only talked about Ethereum and Solana, but I wanted to also go around table, give you guys a chance to talk about some of your other personal favorites as well, and why you're sort of bullish, or why you're excited about that particular chain, or that particular ecosystem. Thomas, maybe you can go first. Yeah.
Nah, I'm okay. I don't really have any other bags to show here. Yeah, I'll stick with Solana. I'm sure I can leave it to Hungarian and Ting Yan to show their bags.
Wangari?
Well, I mean, we were seeing investors in Say Network, which has been a bit of a popular name lately, in the latest narrative of parallel EVMs. I think what they're doing alongside Monad is quite interesting in the sense that it's introducing a new scaling pathway for EVM related ecosystems. It's difficult to say right now, given how quickly the price is appreciated and how much infrastructure needs to be built, to say whether these things can last. But I will say that I think the outlook for the method in which they choose to scale the EVM is benign. And as long as risk on sentiment is there, these chains are always going to get, less. You're always going to get a more forgiving crowd that will bridge over, and obviously, the vibes have to be good, the memes have to be top quality, of which the Super Saiyans are doing not a bad job there.
Yeah, I think definitely cop onto the right memes, I guess. Ting Yen? Yeah. Any other
So
chains? Yeah.
yeah, so I mean, I haven't gone as deep into this as I would like, but maybe I'll just like throw out a couple of things that's on my list of things that I want to pay attention to and want to dive in a little bit more. Firstly, I think it's the Ton ecosystem, which is basically the blockchain that's being built on Telegram, right? And I think it's really interesting. I mean, recently I saw that now there's a wallet function in my Telegram app, and I think it's very clear because Telegram has already like hundreds of millions of like users right now, and is easier for applications to get adoption, right, being built on this. So I think that's one. I think some of the gaming chains like IMAX as well as Ronin are very interesting, especially if we think that we're going to be getting some kind of like game, Web3 gaming revival and bull run in the next like 12 months, 6 to 12 months or so. I think I'm definitely paying attention to like these two chains. And then one that has come up quite recently is around like Bitcoin layer twos. I'm still trying to also figure out, is this real? Is there something that can really be built on Bitcoin around this, and does it really make sense around this? But I feel like that's also going to be a narrative that is going to be coming up.
Thanks for that. I think we're gonna move on from infrastructure to talking about applications, which from all the hype around layer twos and new layer ones in the last 2 years, I think actually sort of lost a bit of 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 attention. I would say, even though obviously we saw Frentech in Q3 that we already talked about, unfortunately sort of faded at the end of the year. Um, I'm just wondering, I think, uh, perhaps for you guys running funds as well, when you look at this, and again coming at this from a funding angle, to start with, is that, you know, why do you think a lot more, capital and investments are sort of going to infrastructure instead of dApps? Are we sort of struggling to sort of break out to other verticals outside of DeFi, right? Even Frentech, really, started first, and then Paradigm came later to invest and things like that. I'm just wondering how are you guys thinking about these investing in dApps? And perhaps Thomas can start first again.
I think it's easy to invest in infrastructure because you get presented a grand view of what that infrastructure can enable, and perhaps for dApps it's a much narrower set. You have to believe in a specific vision. You have to believe in the execution of that, and attention to getting driven to that very specific application, right? So yeah, so throughout like the bear market 2022, 2023, most of the things we're funding were infrastructure related, and yeah, I think that's just the dominant mind share that it was easier to. But yeah, I think internally we had been looking much closer at funding the end protocols that would use existing infrastructure. Um, I think at some point we saw tons and different kinds of either messaging protocols, ZK processors, co-processors, uh, yeah, anything of those likes, and not enough of what's actually going to be built on top of all these different L2s or this infrastructure backing. Yeah, so I think people mentioned previously looking forward to SocialFi getting built out on top. I think again that's pretty interesting, to have your identity tied down to a certain social graph, have that extendable and extensible in the rest um, of social apps. Yeah, I think um, applications are definitely where users will live at, and so that's probably the most interesting thing to be looking at.
And Wangari?
Yeah, I think the harsh reality about applications is that its success is determined by usage, by traction, by dollars earned in terms of revenue to the protocol. Whereas for infrastructure projects, the success of an infrastructure project is not necessarily tied to the fees that it earns, or the even the TVL that it has, right? A lot of times the success of the L1 or infra project is tied to the price of the token, which is in and of itself meaningless but reflexive. So, uh, and the unfortunate thing over the last 3 years is that we really haven't built many applications that have mainstay use cases in crypto, right? I think besides DeFi, which solve very isolated financial purposes, you don't really have a one-stop crypto like decentralized app that replicates or eliminates aspects of your financial life that you currently do today. It doesn't replace your banking app. It doesn't replace, it isn't something like a Grab that you can use for multiple different services. And so, because of this, people still tend to value it on a price to sales multiple or a price to TVL multiple. And given the lackluster growth of the fundamentals there, it's been pretty disappointing. Um, the growth potential or growth prospects have been pretty disappointing, and so I think most people just prefer to stay speculating in verticals where it's easier to sort of sell the dream versus actually rely on the underlying traction to take hold.
I guess then a follow-on question, I guess, Thomas talked about, social fi. Are there particular verticals, I think, outside of DeFi that, you particularly be interested in or excited in, and you're seeing, really cool or interesting stuff being built in that space?
Yeah, for sure. I think definitely SocialFi is one that we've been paying close attention to. I think it will come in the form of it could be integrating existing social media networks. It could be existing chat networks that we have, like Discord, Telegram, combined with introducing token elements in some form of entertainment as well. So I think you're going to get a lot of different applications trying to integrate, some elements of gaming, some elements of crypto tokenization, along with social interaction. We have sort of invested in a few so far that haven't really come to market yet. But I do think you're going to have many different types of takes there, and something is bound to take hold sooner or later.
And Ting Yen, coming to you, I think, thinking about dApps and verticals, outside of DeFi, and perhaps for NFTs, right, which are sort of up your alley. I think looking across, different NFT verticals, is there something that is really exciting you currently?
Yeah, now I think NFTs are very interesting. There are so many different like use cases because the design space for NFTs is so huge, right? At the end of the day, NFTs is just a token that has a unique identifier, and you can use it in so many of these like different verticals. Um, I think the areas that excite me the most personally is seeing where crypto can actually make a real impact in the real world, right? Beyond just finance and speculation, what are the sectors where we can actually see these things being adopted? Um, I think areas like, for example, um, using crypto to I guess like two areas that come to mind. One other thing is like crypto and AI. I think that's very interesting. I think AI is a real trend, and crypto does add this element of verifiability to this space, although I think it's still very early. I think the other one that I have personally been thinking a lot about is how crypto can be tied to, say, like real businesses out there, right? So, one of this really around things like decentralized like physical infrastructure networks, like or the DePIN thing that people talk a lot about, where you can actually use like tokens to like incentivize people to sort of like be part of a network and power that kind of like network. Loyalty programs, some of these are being developed using NFTs as well. Blackbird, personally, I think is a very interesting model, which is basically sort of like restaurant loyalty program that uses NFTs to sort of like signify that you've been to a particular restaurant, and it tracks your visits along the way and rewards you accordingly. So I think like being able to tie what we've built from an infrastructure perspective into actual real tangible business use cases that actually improves people's lives, those are the areas that I feel are the most interesting, and I think these things are definitely heating up.
Yeah, I think it would be interesting to see. I think definitely the loyalty space, especially, has a lot of overlap with traditional businesses, and we're starting to see some of that with Starbucks and the likes. And it'd be interesting to see where they take that further. I did want to cycle back to DeFi, and quickly touch on that. I think it's in a really interesting place right now where during the bear market, it was the blue chip protocols that cemented their lead, right? The likes of Uniswap, Aave, DYDX, etc. Is now sort of dominating their respective verticals. It's I think it's a testament to, obviously, they have some first mover advantage, but also the teams that continually innovate and push out new stuff, new features. I'm just wondering. I think from your perspectives, we seem to have a lot of the core primitives, or the core building blocks sort of in place already for DeFi. Do you think there are still subsectors that we need to explore, or what we're gonna see moving forward is just gonna be evolution, that just bringing more features to the existing sort of primitives, and just try to serve more sophisticated use cases. I guess start with one, Gary.
I think most of the base layer DeFi applications have already been built out. The USPs are pretty clear. I think what's currently lacking right now is a proper RFQ system, which I think can make trading on chain significantly easier. Right now, we've had 3 years where decentralized exchanges are meant to slowly get better user experience and be able to compete with centralized exchanges. 3 years has gone by, nothing has really changed. The UI and UX is nowhere near on par with something like Binance, Bybit, or Coinbase. I don't think it's ever going to get there. What DeFi can enable is a different way to trade the longer tail assets. And I think RFQs based on underlying intent infrastructure is something that is pretty new, coming up in sort of the DeFi 3.0 sort of applications that are going live. But it's still pretty nascent, and it still remains to be seen how big of an impact this really is. Although I will say that the tokenization of RWA assets on chain could prove to be interesting, mainly in the form of being able to transport yield off chain to on chain, so that you keep the dollars and the stable coins within the crypto ecosystem.
Um, Definitely RWA is something we're also paying attention on. Yeah, looking to see, if the interest rate environment changes, whether this it will still have, very strong momentum that we saw in 2023. Thomas, thoughts on DeFi, whether we're sort of done for now.
Mm, I think we're still lacking in terms of some sort of um, super high fidelity um, infrastructure to support like DEX use cases. There are some DEXs out there that are actually usable right now that mimic a almost Binance-like experience. But I guess the underlying oracles and I guess that actually being decentralized and them not completely centralizing most of the execution. Um, I think those remain to be built out. I mentioned just now cross-chain infrastructure and composability. I think that was the original ethos. Um, Perhaps that there isn't that many dApps that actually do perform true cross-chain composability. But I think perhaps with the launch of cross-chain messaging protocols that do support higher throughput use cases, and the ability to lock TVL on one chain, mint collateral on another chain. Lock collateral on one chain and mint assets on another chain. Perhaps that will pop up at some point. That will give rise to a whole set of new user experiences that we can't even imagine right now. But yeah, I'm looking forward to those. Perhaps spurred on by laser.
Yeah, I think crossing composability was a thing, right, in 2023. I think we saw Sushi X Swap, and I think obviously Uniswap announced Uniswap X as well this year. Still looking to see it happen, like you said, and see more people use it, and what they eventually build on top of this, because these are ultimately still primitives, right? And people are supposed to be able to build richer experiences and stuff like that on top of it. Ting Yen, coming to you. NFTs are also sort of intersecting with DeFi these days, right? In lending, people talking about NFT futures. Wondering what you think about all of this. It's interesting, I think, from an NFT perspective, because fundamentally they're kind of different from tokens.
Yeah, I mean, on NFT finance itself specifically, I think it's very interesting. Because if you believe that the NFTs as an asset class is going to continue to expand significantly. I think today is probably about like 10 to 12 billion, in total. If you think that's going to continue to expand greatly, then I think that financial infrastructure around these things also would expand accordingly. So NFT financial products like borrow land, perpetuals, in the future, maybe even things like options and stuff, I think they will definitely get some traction as more sophisticated players come into the space. I do think it's very early days right now. The probably the market size for many of these like financial products in the NFT space is still relatively small. But I think the trend is pretty clear. It's probably going to be up and towards the right over the next like 5 to 10 years or so.
Yeah, and let's get into NFTs proper, because it's been a terrible 2023, and I think we already talked about it at the start. Some of it, I guess, driven by the founders, I guess, of this, or the teams of this initial NFT projects, maybe not performing as we thought they could, or they would, and sort of affecting everything else in the ecosystem, I guess, by virtue of their position being blue chips and things like that. I'm just wondering, I think, probably Ting Yang can go first, which is, what do we need? Do we need a whole new batch of new founders and new projects that's going to take this asset class sort of more seriously, to sort of, for NFTs to sort of make a comeback, I guess.
Yeah, no, I mean, my favorite topic, of course, are NFTs. I think it's pretty clear like what's happening with the space. If you look at any new like technology primitive, it always follows like Gartner's hype cycle, right? And I think like what we experienced in the 2021 to 2022 NFT bull run was that we went, with a new technology, with a new primitive, we went through that hype cycle. We went up to the peak of like inflated expectations, and then basically it all sort of like crashed down like towards the later part of 2022 and for most of 2023. And it pretty much went to this trial of this illusionment. But I think like over the last like 6 to 12 months, I can see that innovation is still happening in the space. There's always so much new things that even I, who's I'm working full time in this space, I find it very hard to keep up with all the different things that's happening. I think we're slowly climbing out this slope of enlightenment. And it just takes time. It's not something that just happens like immediately. And how I always think about NFTs is that NFTs are basically like one cycle earlier than what happened in the ICOs and tokens, right? Where basically what it went through was basically what happened with ICOs in like 2017 and 2018, when there's a lot of like interesting ideas, and these ideas are still interesting. It's just that it takes time to sort of like build these things up. So things around like gaming, art, music, brands, and customer engagement. I think all of these, there is progress being made over the last year. And I think like over the next, hopefully the next 12 to 24 months, we'll start to see some of these things really pick up. And I think that would drive more interest into the NFT markets, because the reasons why NFTs haven't really picked up is because there's just no new participants in the space. It's just the same people recycling capital and rotating from like one project to another, but we haven't seen that influx of like new participants, new retail people coming in. And I think what will take is really like new innovation and new cool stuff that will be done.
Wangarian?
Yeah, I'm really not an NFT expert. In fact, I'm pretty horrible when it comes to NFTs in terms of track record. Uh, I will say that, still price always leads fundamentals, especially in this category. So I am a proud Pudgy holder. I own one Pudgy. I'm never gonna let it go. So we yeah, I don't have much of a view on NFTs. We outsourced most of our NFT exposure to another fund.
And Thomas?
Mm, for NFTs, yeah, I think I don't focus too much on PFP projects. Perhaps it's the gaming sector that's most interesting. I think I've recently looked into different trade markets. I don't know if you guys have seen Boots on Solana, where you can decompose your NFT trades and sell them individually, and then customize your NFT with traits that you've bought as well. That's genuinely interesting to me, and I guess with the rise of more fully on-chain games or games with NFTs with their underlying characters or traits as NFTs, then maybe yes, that brings in new participants apart from the current NFT degens that are just trading amongst themselves.
Yeah, since you mentioned games, let's talk about games, right? And some of the other sort of verticals within NFTs as well. Thomas, I know Rise Labs has a strong interest in gaming. We had Dermot on, I think, last year to talk about games as well. Just yeah, you know, perhaps can share a bit more insight about what you guys are seeing in the gaming space. Is it something that we can expect to sort of break out, or there'll be a hit game in 2024? Yeah.
I think much of the gaming funding was back in 2021, early 2022, and it takes a decent amount of time for a game to go from conception till you actually ship. I guess back then, perhaps there's the two sides of actors. One side being experienced game developers that have no idea what crypto is, and then the other side, crypto natives who have no idea what games are but want to ship them anyway. And I think through 2021, 2022, the natural attrition of people who are too fine on either scale have weeded out, and now we're left with truly the intersection of people who actually understand games and who also understand crypto. We've seen some pretty, I'd say, decent uh, coming to AAA games that have given experiences that are similar to what you would expect from traditional titles. If you guys have played Parallel, I think that is something that has continued to capture attention. It's actually fun. It's definitely playable, and the flywheel of having the trading cards as NFTs with having on-chain points and a token backing it and on-chain rewards. I think that's extremely promising. Yeah, so going into this year, we have a slew of new games coming up that we are pretty bullish on, and yeah, I hope that there are more gamers that pay attention to these games and actually play them, and then we'll have a new sector of people that actually come to crypto, right?
Yeah, definitely. I think that's what we're all hoping for, that new games and better games will bring in more users. Ting Yen, coming back to you, I think thoughts on games and probably other sort of verticals within NFTs that you're bullish on outside of just PFPs and art, I guess.
Yeah. So I mean, gaming is a huge topic. We can go into it for like a whole panel, but I think like just some quick views is that I think when we talk about gaming, we kind of lump it all together. But actually, like within gaming, there are various sub verticals like within gaming itself. I personally do think that the sort of like AAA gaming vertical is a very difficult vertical for crypto to play in, because like it just takes so much time and money to develop a true AAA game. Usually 5 to 7 years. often hundreds of millions of dollars to sort of like build that kind of like experience that actually provides the same level of experience compared to a more typical non-Web3 kind of like game. So I think it's a very difficult playing field. Very hard to predict, which are going to be the successful ones, and they are competing against very established IPs, like Fortnite, Call of Duty, and all of these things out there. So it's going to be difficult. I think where gaming can be very interesting is on the more casual side of games, where these are games that may not necessarily have a very long life cycle, but they appeal to a very wide audience. And being able to incorporate crypto as a way of like making payments, selling them very cheap like items, I think can be a very interesting like business model for some of these like games. And the development cycle is a lot faster for that. So that's where I'm kind of like paying attention at. I think on other sort of like NFT use cases, the other area which I'm personally also taking a bit of interest in is seeing like how NFTs are used to tokenize things like physical collectibles. We're seeing things like Pokemon cards, luxury watches, rare sneakers starting to be coming on chain and be as NFTs. And I think one thing is that it does unlock a new level of liquidity for these items. But I think more interesting to me is like how by putting these things as NFTs and being on chain, you can actually create like new consumer experiences around these things. You can, for example, tokenize your Pokemon cards and then put it in a say like on cyber gallery and display it in a way that you like, because it's all composable and they speak the same language. You can do like loot box kind of mechanics for some of these in terms of distributing things. And so like Courtyard is one company that's doing this like with Pokemon cards. So I think that's something that's very interesting to me. It'll take time, but I think we'll see more of these things start to come on chain.
Yeah, definitely. I think really interesting. It's the NFT and collectibles side of RWAs, sort of coming onto chain. That's sort of like a different sort of emerging, I guess, sort of area of interest. We're almost out of time, but I wanted to ask about ordinals before we wrap up. Definitely something that blew up. I think we definitely weren't expecting it in 2023. Will it move beyond memes? I guess is sort of the big question. I mean, I know there's a project that started to give it a bit more smart contract functionality, but do you guys see potential and sort of like a path, right? For growth for ordinals and sort of these inscriptions, or do we need to wait for Bitcoin layer to sort of emerge before some of these things become actually useful? Tingy, you want to go first? I see you nodding along just now.
Yeah, sure. I mean, just some very quick thoughts on like ordinals and inscriptions. I think it's very interesting, even though I kind of like faded it honestly when it first came about, because like Bitcoin, really, can you do stuff on it? But it's basically a new way of inscribing data on the blockchain, right? And once it's on the blockchain, it becomes composable. We can do a lot of interesting things with it. And I think we are in the early days of scratching the surface of what this can potentially become. I think lacking enough infrastructure, we can do simple things like using it as a store of value for things like high-end digital art, collectibles, representations of PFPs. I think there's going to be more interest around things being fully on-chain, because if you look at NFTs today, honestly, like many of them aren't really on-chain primitives, right? A lot of them point to something that's outside the chain, and it means it's not as like permissionless and decentralized as we think. I think the problem inherently is just that it's very difficult to build stuff on Bitcoin just because of how it is. And I think that's going to be the major factor that's going to limit sort of like adoption and growth beyond just like speculation. So it probably take time.
Wangarian inscriptions.
I think he's having some issues. Why don't I go first?
Oh, okay. Yeah, Thomas, why don't you go ahead?
But I think you have to see what's actually even possible with the current inscription infrastructure, right? So if you're attaching just some sort of metadata or some sort of object within that field, and then you have an off-chain indexer that's actually grabbing that, then you can't actually have programmatic smart contracts on that, and you will have to wait for a Bitcoin EVM or a Bitcoin VM or some sort of VM to be established before you can actually begin using Bitcoin as an execution layer. So yeah, essentially until then, you will just see meme coins. Yeah, and then everything else that is being built, like now, if you look at the Ordinal projects that actually have some sort of DeFi functionality that operates on ETH.
Okay. I think we're pretty much sort of slightly overrun now. Let's see whether Hungarian comes back, but I think we have to wrap up here. I think thank you so much both of you for joining us. I think before we go, just wanted to give you a chance to impart some sort of parting wisdoms or thoughts or advice for our audience for 2024. Thomas.
I think there's a confluence of certain factors that will lead many to believe that this will be a bull market year. I'm inclined to agree, and what that means is stop using leverage and buy your tokens and send your hands. Don't overtrade. That's it.
Thanks so much. And Ting Yen.
Well, I mean, I've spoken about things that I'm excited about over this last hour. I will just say that I do think like at some point, and it could be pretty soon, pudgy penguins will flip bored apes, and I actually would be excited to see that.
That's a bold prediction of it. Maybe not as bold as looking at the trajectory of the project. So again, this only leaves me to thank the both of you again, Thomas, Ting Yen, for joining us, and Mongarin. Actually he dropped off, but definitely a big thank you to him as well. And thank you everyone in the audience for staying on and listening to our meetup. It's been really fascinating. I'm quite sure we could go on longer, but this is all the time that we have. So thank you so much for listening in, and hope to see you guys in the next meetup. Thank you so much, guys.
Yeah, thanks. This was fun.
Thanks, guys.
See you.
Ciao.